Good morning and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I came down with a little bit of the conference crud, aka the vid. Basically, I'm sick today, but not too bad. I did sleep a lot last night. I played a lot of World of Warcraft yesterday, getting back from the mining conference in Round Rock, Texas. To everybody I met out there, it was super awesome meeting you. I learned a lot. I got to do some ASIC repair with Austin Childress, so thank you for showing us that. That video went up yesterday. We got to talk politics and learn a little bit more about all of that in the New York area, which was super awesome. And a lot of these guys we're going to be having come back on, hopefully, maybe in a better setting, because obviously, my humble opinion, I got to go to more conferences and practice. Obviously, I'm not good at setting up and getting all that done. So apologies. I'm going to try to get better at doing that. But my voice is already, also you can tell, is already going today. So, just bear with me as we get through all of this, but I really want to make sure that we are keeping up to date with all of the content, etc. I want to thank everybody for stopping in, for all the support throughout the weekend, as well as, of course, today. So, obviously, the big topic of the day is going to be Ergo and Ethereum Classic Twitter accounts and the acquisition of the Ethereum Classic Twitter account with 600,000 followers by basically the Ergo community via essentially a giveaway from Charles Hoskinson, who is, of course, the creator of Cardano. We'll go into detail for that. We have an article pulled up, and then we'll talk about my personal opinion on it, which I think most of you are already probably aware of. After that, we do have a ton of news to get through. I'm going to try to get through as much of it as I can, but past precedents, when is the bottom for Bitcoin coming? They say it's going to be November and December, or sometime within that range. Let's hear why. Then we're going to be talking about Binance and the $100 million hack. Of course, that happened on October 7th while I was out at the conference. Kind of funny, I said, I really, the best part about conferences is getting to go out and meet everybody, but outside of that, obviously views down because I should have caught up on a lot of this news, and I got sick from it. So unfortunately, it kind of puts us behind because we should have been up to date, of course, on this, but it's okay. We'll catch up today. We're also going to be talking about Bitcoin mining. Apparently it's cool again, pun intended. We'll be talking about that, as well as Argo blockchain raising another $27 million to ease liquidity pressures, and Bitcoin mining difficulty is now at an all-time high. So all of this is getting pretty crazy as we look through it, of course, because Bitcoin is definitely pricing people out as far as Bitcoin mining goes. And I do have this fear that essentially we are consolidating all of the Bitcoin hash rate power and under basically the control of nation states and power companies. And I don't know, I talked to a lot of people about that this weekend out at the conference, because that's my biggest fear. And at this type of conference, a lot of the guys are, Bitcoin maxis, Bitcoin miners. So I got some of their perspective, etc. And I think that having them come on and talk about it too at some point would be beneficial. Now, a really interesting move from Nvidia. We're getting some GDDR6X on the RTX 3060. This could make it a mining powerhouse. We're going to take a look at the preliminary specifications that are proposed for it and then go from there. We also have a new release from Team Black Miner, Team Red Miner, and LOL Miner. We'll get into all of that and more right after a word from today's sponsor. Today's sponsor is BT Miners. Purchasing mining equipment online can be dangerous. With all of the fake storefronts and scams, it can be hard to find a reliable source. That's why when BT Miners reached out for a channel sponsorship, I started by verifying that ordering and delivery went smoothly with the purchase of my own. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both asicminervalue.com and cryptominer.com. Follow the affiliate link in the description and tell them SOT sent you to support the channel. And welcome back, ladies and gentlemen, boys and girls. The first thing we got to get into, of course, is LOL Miner version 1.60. Miner releases are always the best way for us to look for new and the latest things happening within cryptocurrency. And the changes here are as follows: significantly improved performance on Flux for Nvidia Turing and Ampere cards, as well as for the RX 5000 series based GPUs. The expected performance on Ampere and Navi GPUs is about 15 to 20% above common implementations on Turing based GPUs. The performance matches common codes, but is more energy efficient. Now, here's the crazy thing that you guys should be aware of. These RX 5700s are apparently doing 41 solutions a second at 97 watts. Simply insane. So definitely want to go check it out if you are running the 5000 series GPUs. And the fixes, they have smaller fixes in Caspa Stratum, removing the extra string lines when a share gets rejected and fixing a potential infinite loop that might consume CPU time. Windows re-upload fixed ETHW and ETC plus CAS dual mining on Nvidia GPUs. And then moving on from there, we do have more miner releases. Team Red Miner version 10.4.1 released 3 days ago. A patch fixing the Caspa kernels for Radeon 7s on PAL drivers, Windows and older Linux OpenCL, and GFX 1011 and 1012 GPUs like the BC160 and the 5500 XT. So the highlights are fixed Caspa kernels for the BC160 and Radeon 7 family on older PAL drivers, and fixed rare cases of ET hash false alerts for dead GPUs. Nothing too crazy there on Team Red Miner, but definitely important to take a look at if you are running some of those GPUs. I know there are some large farms, like we saw the one that Bitsby Trippin toured that was like a ton of BC160s and all that sort of stuff, but a lot of people didn't get their hands on them. I didn't, at least. We have a couple of not BC cards, I guess. I'm trying to remember. The ones that are basically 6600s. Forgot the name of them now at this point. But that's okay. That's not what we're talking about today. We have the Team Black Miner version 1.70 release as well, 20 hours ago. They added the Kapow algo for Ravencoin. And then they restored ZIL single mining. They added a new dual mining mode for ET hash and ZIL and ETC hash and ZIL. And they fixed pool speed in the console for static diff pools for Vertcoin. Note that the new Zilliqa dual mining mode support for all supported ETHW and ETC pools, and the dual mining will normally give plus 20% more income than ETHW ETC standalone. Now, we're kind of aware of that just because you're adding in another algorithm, and Zilliqa really is you're not dual mining as much as you are just swapping off and mining ZIL and then going back and mining Ethereum. So there you go. There is all of our miner releases. I can tell I'm going to be barely hanging on today because I can feel it all up in here. So bear with me. Let's get into it, though. I may just be pausing a little bit more frequently. I feel extremely tired already. So the GeForce RTX 3060 is getting a new makeover with GDDR6X memory. This is a report by WCCF Tech. Retailer Lenovo Shop, located in Slovakia, has listed Nvidia RTX 3060 12GB card featuring 8GB of GDDR6X memory. The GPU differs from the previous graphics card in the United Kingdom since it is a non-TI variant. However, the memory amount on this card is surprising, as the last rumor about the 3060 non-TI graphics card was that it would come with the reduced 8GB capacities. The speculation surrounding the updated memory module is that it would offer the Nvidia GeForce RTX 3060 non-TI graphics card both higher memory bandwidths and faster speeds. Additionally, the TDP would also increase. Overall, like for mining, like when we look at these things, what is important, right? Big buses. We like big buses. We cannot lie. Faster memory speeds, right? And overall bandwidth, because basically if you have faster speeds in a bigger bus, you get, more bandwidth. And the more bandwidth you get, the more hash rate you get. Not always, but usually. And a low-end card like the RTX 3060 that would be cheaper with, basically the memory of essentially the RTX 3070 at this point, or the RTX 3060 Ti. Oh, and that's really up in the air too, would be amazing, because here's the thing. RTX 3060 Ti and 3070 running GDDR6. But if we get a 256-bit bus on 8 gigabytes of memory on GDDR6X, the odd thing is we could have faster memory on the RTX 3060 in this specific rumored case than we would have on the RTX 3070. Now, lots of stuff going on in the Bitcoin mining industry. We've obviously had a bunch of mergers, a bunch of acquisitions, and regardless of all of that, we've had an increase in hash rate across the board. It's actually quite impressive. It does appear to be due to, of course, a majority of the hash rate moving over to the West, as far as moving into the US. We are now seeing a cycle of winter, summer months in the US as opposed to rainy season over in China. What does this mean? Well, it means that potentially we've actually had this, hash rate available in the US, but the heat was kind of preventing a lot of it from coming online. But also we do know that power and facility build outs, site development has been a big issue within the cryptocurrency mining, especially as it pertains to the United States. And as that gets developed out, temperatures cool down, more hash rate can come online, and it's really pushing these margins down pretty quickly. But regardless of that, Bitcoin miner Argo blockchain has raised $27 million to ease liquidity pressures. Now, their shares plunged 15%, and the firm has also sold 3,400 Antminer S19s to raise $7 million, which is interesting. They're liquidating some of their actual machines. That's not a good sign. London-based Bitcoin miner Argo blockchain has raised $27 million after agreeing to issue 87 million shares to a sole investor. In an announcement published on YouTube, the firm's CEO Peter Wall explained a number of steps Argo blockchain has taken to improve its liquidity position in light of the ongoing crypto bear market. Our profitability has been squeezed from both sides, from higher energy prices to lower Bitcoin price. That's resulted in a cash crunch for Argo, Peter Wall said. In addition to issuing 87 million shares, which equates to around 15% of the business, Argo announced the sale of 3,400 Antminer S19j Pro miners to a third party for a total of $7 million US. The sale of mining equipment will cause a reduction in hash rate, Wall added. Yeah, of course. Soaring energy prices coupled with a plunge in the value of cryptocurrencies has created a difficult environment across the mining industry. Compute North, one of the largest operators of crypto mining data centers, recently filed a bankruptcy after it owed as much as $500 million to at least 200 creditors. Assuming all of the transactions close, we're confident we have the liquidity and balance sheet to get us through the next 12 months, Wall concluded. At press time, shares of Argo blockchain were down over 15% on the London Stock Exchange, as they should be. Try to hodl your silicon more than you hodl anything else. Sell all that Bitcoin. I don't know. Not financial advice, obviously. But this is where it's getting to now. And that does mean, we're about to see why people are saying here in a little bit why we should hit a bottom in November or December this year for Bitcoin, which obviously will translate across the cryptocurrency industry. But once you get to the point of miners basically selling off the hardware that they're utilizing to basically run their entire business, that's pretty much it. All you have is your assets, which are your cryptocurrency miners, and then your costs, which is your power. That's pretty much the two primary things you focus on. As soon as you are basically dumping your assets to cover your costs, I think that means we're getting pretty close to the bottom here, boys. Not financial advice, just observations, right? But we do have an opinion piece here saying Bitcoin mining is cool again, and we can thank Africa, prudence, and growing hash rate for that. It has been a tough year for crypto mining industries, but the industry is primed for a rebound soon. Crypto mining companies have struggled mightily in 2022, but over the last week or so, the tide may be turning. One shred of evidence came from Barclays, which initiated equity research coverage on Core Scientific earlier this week, issuing an overweight rating. Now, an overweight rating isn't a buy this now, oh my goodness, what a steal. This is stock is liable to rip your face off rating instead of more of a, hey, this thing will perform well compared with its peers. Basically, if mining stocks don't all go up, at least cores won't go down as much as the others. This is something that actually we've been talking about with cores for a while, but not exactly a strong suggestion that mining is back, but it's objectively better than everything is going to zero and our best days are behind us. But beyond this one stock rating and otherwise positive stock performance the last 2 weeks, the tide against mining is turning. Mining is cool again. Banks' equity research teams spend time writing about companies because A, the banks think the companies operate in an important industry, and B, the covered companies might need to raise capital someday, and they just might choose that bank to raise capital on their behalf if they get a nice write-up. Barclays initiating coverage on Core Scientific itself isn't too far out of bounds. But what was a bit surprising, at least to me, was the report mentioning that, quote, we remain positive on the long-term viability of Bitcoin, and we view cores positively in the light of our long-term bullish view on BTC. Barclays isn't some nobody bank pandering for clout, so if the idea that Bitcoin has long-term viability penetrates more and more banks, the financiers at these banks will be excited about the opportunity of servicing the mining business that secured the Bitcoin network. But for now, let's put Wall Street aside and shift our focus to Africa. Chain Analysis, a blockchain forensics company, published a report 2 weeks ago suggesting that crypto is thriving in sub-Saharan Africa. Of the regions Chain Analysis studied, data showed that sub-Saharan Africa accounted for the least amount of transaction volume of any region, but a deeper look at the data shows the region is experiencing a grassroots crypto movement. Africans conduct the world's highest proportion of retail payments of less than $1,000, 80%, and carry out far more peer-to-peer transactions proportionally, 6%, than all other regions. The report, well summarized by the colleague Frederick Manawa, I think is how that's pronounced. CoinDesk managing editor Christy Harkin added important color on CoinDesk TV by comparing El Salvador's crypto adoption, where Bitcoin is legal tender, with the African adoption. She said, with El Salvador, we're looking at a situation where the use of Bitcoin was implemented in a top-down way. To contrast that, the strong crypto usage and adoption rates in African countries is from the bottom up. In fact, adoption is going against what their government would prefer them to do in many cases. And that's what we would expect to see in essentially a principled or fundamental Bitcoin usage, right? Essentially, nation state says, no, you can't utilize this. It gives too much power and too much individual freedom. And the people say, pound sand, we're going to use it anyways. We've talked about this before, the kind of how Bitcoin is inevitable at the end of the day. We've talked about some of the aspects of like it being a Trojan horse to the nation states and banks, and that's one way it could take over. We've talked about it providing individual sovereignty and freedom. We've talked about crypto use cases such as stable coins when we get into Argentina, etc., for people there to protect their funds. So crypto as a whole is also doing this sort of thing. It's pretty interesting to see it kind of all come to fruition. I've talked about this before, but right now, the best part about being alive is that you kind of get to experience it all as it's happening, because I think at this point, it's pretty safe to say that no matter how this ends up at the end of the day, things are changing, right? It is literally the end of the world as we know it right now. So it's really exciting to watch it all play out and kind of wait to see exactly how this plays out, right? I think that's an important point. While the Salvadorian legal tender law was sparked by a circular Bitcoin economy that cropped up at at Bitcoin Beach in El Zonte, a coastal town in El Salvador, it's still a law that requires the adoption of Bitcoin. So back to mining. Last Tuesday, there was a video making the rounds on Twitter of a micro hydro plant in rural Kenya. And I believe, is this the one? I'll have to show you guys. This one's really cool. And then I met a guy that was doing another one. But that was in South America. It's basically repurposing oil from the river. I don't know. I'll have to go look at it again. It's pretty crazy stuff that's going on. So it says, this is great. A village in Kenya that doesn't have reliable electricity now has it in a way that isn't completely obtrusive to the surrounding ecology. The kicker, the hydro plant is also mining Bitcoin with excess electricity to offset costs. The plant was intentionally overbuilt, and according to tweets from Luxor Technology CEO Nick Hansen, the mined Bitcoin could effectively reduce power prices by up to 90%. I believe, and here's where the crypto community needs to be extremely careful in the way we talk about things, in the way we approach things, and within our moral compass. We need to make sure that crypto has a good moral compass. Why? Because the primary attacks on cryptocurrency is that it is bad for the environment, right? But if we look at the way cryptocurrency is being utilized to not only support the local surrounding ecology, but reduce waste within cryptocurrency, reduce waste within power, as well as push towards incentives of utilizing renewables, it is extremely important that we maintain an above board approach. And I think that should be applied across, like, if you care about cryptocurrency at all, that's what you should be focused on, in my humble opinion, because the attacks are going to come in pretty heavy. And if we aren't united on the front of, like, look, this is the way it is, we're helping, less developed countries and providing them with renewable energy, and then subsidizing that with Bitcoin mining so that we bring up the very bottom, the grassroots, to the top. That is the united front we need to have right now. This is really one of the coolest things I've seen in a long time, partially because electricity is awesome, but also because it gives credence to a popular Bitcoin trope. Bitcoin mining provides an ideal way to monetize otherwise stranded, cheap, renewable energy. As I wrote in April for CoinDesk Research, Bitcoin mining could be economically impactful to communities near these stranded energy sources, as they are able to monetize their proximity to cheap energy sources. And here it is. There's just one example, but a rural community can now enjoy cheaper electricity because of Bitcoin mining. Surely there are more out there, and there are more coming. Another reason why this is cool is because it's emblematic of how fragmented and therefore decentralized Bitcoin mining can be. Yes, there are sleek, put together, and publicly traded corporations mining Bitcoin in big warehouses, but there are also rural communities that can just as easily mine Bitcoin. Of course, even though I offered positive stories above, there's still the reality that the mining business has taken a hit this year. All said, there is no particular reason to worry about the mining industry as a whole. Bitcoin mining will be fine, but the cast of characters might change since the capital markets are available up until the moment they aren't. Bitcoin will be better for it, but there might be some pain coming at the company level. And I think that's true, right? We're seeing a lot of mergers and acquisitions. And obviously, like we just talked about, Argo blockchain selling off a bunch of their miners. And we saw that pain. We've already talked about the stock performance, but there's more. Last week, CoinDesk reported that Bitcoin mining company Marathon had invested $31.3 million in Compute North, which filed for bankruptcy last month. CoinDesk also reported that publicly traded crypto mining company Argo Blockchain raised $27 million in equity capital due to liquidity pressures in tandem with selling 3,400 of its mining machines. Of course, which we just talked about. On top of the corporate pain, Bitcoin mining machines have been offered for sale on third-party selling platforms like Kaboom Racks at steep discounts. And we do have an interview coming up with them as well, guys, so stay tuned to the channel. Clearly, things are tough right now, and the consensus seems to be it'll get worse before it gets better. but I think mining is on the come up. On October 2nd, Luxor Technologies head of research Colin Harper wrote, Bitcoin's hash rate is absolutely popping off right now, rising some 8% over the week to a new all-time high this morning. On October 7th, hash rate, the total computational power being used to mine Bitcoin, was around 260 exahash. That marks a 24% increase over the last 3 months. Due to the increase in hash rate, the Bitcoin network is set to make it harder to mine Bitcoin. This is the so-called mining difficulty adjustment performed automatically by Bitcoin's code roughly every 2 weeks, and because it's a relatively aggressive upward adjustment, there is a a pessimism around the short-term prospects of mining. Now, there is kind of, here's what's weird. They're saying, like, obviously, like, this network hash rate going up is a good thing or a good sign or a good signal for Bitcoin. But like I said, I really think this has to do more with the delivery timing of the machines, right? Because a lot of stuff was getting ordered last year that wasn't even getting delivered to this year. The actual build outs of the sites that were not prepared and were delayed due to basically shortages on materials and supply chains and all of that, as well as the very, very extremely hot summer in the United States, preventing all of the rigs to come online. So I think that's a lot more of a cause of why we're now starting to see the hash rate come up, as opposed to actually faith in Bitcoin, right? That's how I read it, but we'll continue. He says this is why he's not pessimistic. Things got tough for mining companies, and the companies that have survived are the companies that were operating responsibly and prudently. Some companies were taking advantage of the cheap capital available to them because of low interest rates to run their business, and that's simply not possible anymore in a rising interest rate environment. The mining companies that have endured this shakeout are simply the best of the bunch. On top of that, creative ideas like rural micro hydro plants that mine Bitcoin in Kenya are cropping up, and the injection of creativity into the space gives me optimism. To cap it off, the network's hash rate is growing quickly in spite of the fact that Bitcoin's price isn't really exploding. Typically, a higher Bitcoin price would encourage more people to mine since the rewards are potentially greater. So instead of miners simply piling into the network in a quest for massive gains in Bitcoin, they are joining because it is a prudent business decision now that the network has proven staying power. Not to mention October is historically positive performing month for Bitcoin. So Bitcoin trading in a tight band between 19,000 and 20,000 might not last very long. So with all these things in, he'll say it again, mining is cool again. Now, we have a very opposite opinion here, right? So he's proposing that October is going to be well performing. Now, that I guess that could be true. And then right after this, we have basically predictions that, November and December is when we're going to see the bottom of Bitcoin. I don't know either way. It's really interesting to go ahead and look at it, though. So at this point, though, let's go ahead and talk about Bitcoin mining difficulty surging to that all-time high. And let's get the numbers on it, because I think this is the most relevant to what's happening in the Bitcoin mining industry. Bitcoin mining difficulty surges to all-time high, putting additional squeeze on the miners. The difficulty gauge rose 13.55% from the last adjustment roughly 2 weeks ago, the largest such move since May of 2021. The latest difficulty adjustment is in and now requires 35.6 trillion hashes to mine one Bitcoin, up a whopping 13.55% from the previous measure, according to data from BTC.com. Part of the Bitcoin code includes a so-called difficulty adjustment every 2016 blocks or every 2 weeks. The size and direction of the adjustment depends on the total computed power mining Bitcoin, and its purpose is to keep block confirmations coming about every 10 minutes. The current network hash rate is 257 million terahashes per second, according to blockchain.com, a significant rise from the time last year when it was around 140 million terahash a second. Rising difficulty paints an ever drearier picture for Bitcoin miners who are already feeling the squeeze of weak Bitcoin prices and higher energy costs. To name two recent examples, we have the London-based miner Ergo blockchain, forced to sell $27 million last week to ease liquidity pressures, and mining data center provider Compute North filed for bankruptcy. Quote, our profitability has been squeezed from both sides, from higher energy prices to lower Bitcoin price. That's resulted in a cash crunch for Argo, said Argo blockchain CEO Peter Wall. Bitcoin continues to hover in a very tight trading range around the low $19,000 area. Price at press time was $19,333, or as we read about it on this video, $19,285.96. So, there you go. As far as all the catch-ups on mining goes, we have two more mining companies that are suffering. Core Scientific sounds to be one of the ones that's doing the best currently right now. And then let's talk about Binance and a little bit of proof of stake and bridges and all. Look, we have found, of course, that bridging's been like the #1 kind of attack vector for cryptocurrency in recent times. This isn't extremely surprising, but let's get the details for it from TechCrunch here. So at least 100 million stolen. And we have kind of a roundup. So I think, let's see, is this the one we want to do? No, I think we want to do a different one. I have another article here that I think's better. Let me find it. I think we had one that explained it better. Yeah, I think it is CoinDesk. Yeah. CoinDesk, I think, is better explaining this. Let me see. Yeah. I think I was reading that other one to get more information. So, BNB chain halts after potential exploit drained estimated $100 million in crypto. The chain has now resumed operations after fixing a problem that let someone create $570 million of the token, though they were only able to abscond with a smaller amount. All right, here we go. BNB chain was forced to hit the brakes on Thursday after the blockchain with ties to the world's largest crypto exchange by volume suffered what is called a potential exploit that on-chain evidence suggested could have targeted hundreds of million dollars in crypto. BNB chain is composed of BNB Beacon chain and BNB Smart chain, BSC. Quote, due to irregular activity, we're temporarily pausing BSC, BNB chain tweeted from its official account, later confirming that the activity was a potential exploit that it characterized as contained. Initial token movement suggesting that up to $2 million of BSC tokens worth roughly $570 million were targeted by an attacker late Thursday. But Binance CEO Changpeng Zhao estimated in a tweet the attacker was only able to get away with 100 million of that. The BNB chain also tweeted that $7 million of that amount was already frozen. That such a small, comparatively speaking, sum of assets were stolen underscored the upside of BNB's gamble to halt their chain rather than risk more assets escaping. Blockchains are perpetually, I can't say that one. Decentralized beasts. I need to go educate myself on how to say this. I'm going to do it right now. I think I'm getting too tired. Here we go. We got it, boys. We can do it. No. Just tell me how to say it.
Purportedly.
Purportedly. There we go. I have said that before. Alright, whatever. Here we go. Where are we at? No. Yeah, so we talked about that and that. Basically, they halted the chain. They confirmed that it coordinated a shutdown of the chain after spotting issues with the BSC Token Hub protocol, the clearinghouse for crypto transactions moving between the Binance-linked blockchain's interlocking parts. It thanked validators for moving quickly. Quote, we are humbled by the speed and collaboration from the community to freeze funds, one tweet read. The chain has since come back online since then, and BNB chain announced that it will hold a series of on-chain governance votes that will decide whether the hacked funds should be frozen. There will be a vote on a bug-bound reward system to prevent future hacks from happening. The specter of an attack rocked BSC's native BNB token, which after a sleepy day of trading dipped to $280 from $293 according to CoinMarketCap, which Binance owns. On-chain data shows that this afternoon, 2 massive withdrawals of 1 million BSC tokens from BSC Token Hub by an attacker that nabbed crypto assets with cross-chain swaps, bridges, and borrows. Regardless, BNB's Twitter promised all funds are safe and said it will help freeze any transfers. Twitter sleuths point out that Tether, the largest stablecoin provider, has blacklisted the offending address, suggesting the firm suspects the movement of tokens was the result of an attack rather than something more benign. I have kiddos in the background going crazy. All right. So, I mean, like, we've covered all these before. I think, like, it's still concerning regardless that they're able to. I don't like the central. So it's a difficult one, right? Because, like, obviously people are going to want it frozen so they don't lose money. But the idea that basically Binance can just go out there and freeze all funds, freeze the chain, pause everything, and, you know, basically manipulate their own chain to their own advantage makes it essentially, in my opinion, against the fundamentals of cryptocurrency. And I wouldn't support it, right? But, you know, like, we've seen this problem in crypto for a long time where the actual issues within the bridges, I don't know if you can pause. Like, it's odd that they pause the entire chain instead of pausing the bridges. Of course, it depends on, like, what they're trying to prevent. Obviously, if that's compromised, then I see it. But this also appears to me that, like, by and large, proof of work, we could say proof of work doesn't have this problem, but then we would have to go all the way back to Ethereum and the DAO hack, right? And what is that problem? That problem is basically being able to reverse transactions, right? I mean, at the end of the day, that's what we're looking at. And it's not dissimilar from the DAO hack. So proof of work doesn't necessarily stop this. It all just depends on who's in control of it, right? It's probably why a lot of people become closer and closer to being Bitcoin maximalists. And I understand that perspective. Okay. I am getting near the absolute end of being able to stream today, and we are going to wrap it up with, of course, Ethereum Classic and Ergo. Mr. Charles Hoskinson. Obviously, a lot of people have been very upset about this. On the interwebs. Excuse me. Where basically, you know, you do have essentially some sort of tribalism going on between Ethereum Classic and Ergo. I would encourage you guys to never be tribalist about the cryptocurrency you follow. So that's my first statement. A lot of people would like to, look, I've been doing this for a while, and you can see people from all sides in every single cryptocurrency that are tribalist attack me every single time, right? So Ethereum Classic, Fearo's done it, Ravencoin's done it, as far as the community goes, Ergo's done it. Everybody, you know, has their tribalist movements. If you have somebody that's reporting objectively to the best of their ability across all projects, and they say something that is generally negative or may put one of those projects in a negative light, obviously the pitchforks come out. Here's the deal. At the end of the day, I'm going to continue to report on all of them, and I will report on the good things just as much as I report on the bad things. And my audience will continue to trust me over the people that have ETC or ERG or RVN in their Twitter profiles, okay? That's just the fact of the matter. I'm sorry, but people are going to trust me over you if they are not tied to a particular project. And so I try to take that with as much responsibility as I can and provide an objective account as I can, especially within the video content that I do. So what we're going to do today is we're going to read the Cointelegraph article on what happened, We're going to present to you guys what happened, and then you can decide on how you wish to approach it. I have my opinion with my bias that I will give you guys at the end, okay? 670,000 follower ETH Classic account turns into Ergo. What happened? Cardano founder Charles Hoskinson has repurposed the Ethereum Classic Twitter account to now benefit the Ergo platform. Followers of the Ethereum Classic Twitter account may have found themselves the unintended fans of an entirely new crypto project after Cardano founder Charles Hoskinson turned the account into the new community page for the Ergo community. The Ethereum Classic account had built up over 600,000 followers since its inception in July 2016, and up until September 15th, it has been used to post about Ethereum Classic. As of October 6th, however, the Twitter page now reflects the Ergo platform, a proof-of-work blockchain capable of facilitating smart contracts similar to Ethereum with links to Cardano. In a lengthy thread pinned on Ethereum Classic's new Twitter handle on October 6th, Bob Somerville, the director of a public charity supporting Ethereum Classic, pointed the finger at Hoskinson for repurposing the account, noting that 6 years of community work has been erased. The new handle is yet to reach follower numbers of its old account, with only 364 followers at the time of writing. In the thread, Somerville outlines how Hoskinson's blockchain company Input Output Hong Kong (IOHK) withdrew from the ETC for a second time following a lack of support for a proposal of his, and refused to talk about the Twitter account until a September 6th Twitter post where he declared he would not be returning to the ETC community. And I remember this. We reported on this, right? The move by Hoskinson was essentially boosted the Twitter followers of the Ergo platform, which has the old handle of Ergo platform Erg with only 64,000 followers. The Ergo account holder has even directed its followers to its new account Ergo_platform. Issues between Hoskinson and his former project are not new, with Hoskinson being well known for his dislike of Ethereum and going as far as calling Ethereum Classic a dead project with no purpose. So that's his bias, right? Now, my issue has nothing to do with Hoskinson, actually. If he controls the account and wants to give the account to whoever, go for it, right? My issue has really not much to do with a lot of with the side of Ethereum Classic. They haven't had control of the account for quite some time. So as far as that goes, I think support should probably be built up from the Ethereum Classics community side as well. I think in general, though, it is clear that Ethereum Classic by name is part of the reason why that account has over 600,000 followers, right? So it's tied to the name to a certain extent. I don't think that that's deniable. Here's my only issue, and this is it. Having an account that has 600,000 followers that were not earned by the project is deceptive to potential future investors. And that is on essentially what could be the equivalent of a financial product. I think that it's dangerous. I think that it's deceptive, and that is it. That is all I think as far as this entire situation goes. I think that the utilization of an account with followers that they did not earn based off of their own merit is deceptive to the rest of the mining crypto community in general, overall. You can agree with me or disagree with me. But I'm not going to get into semantics or chase any of your outside arguments, because it's kind of a moot point, right? Like, there's no reason to go down the path of, well, Charles had the right to do it, because it doesn't matter, right? We're talking about the perception of it. It doesn't matter if ETC is okay with it, because that's not the argument. I have one argument, and that is it's deceptive to the crypto community and potential investors. That's it. End of story. Okay. So let's get into mining profitability. Oh, actually, we're going to get into the prediction for November and December bottoming out. We're going to get into that right after a word from today's sponsor, and I check on the kiddos here that are deciding to run outside the front of the door. And then I will put a poll up for you guys over here. Today's sponsor is BT Miners. Purchasing mining equipment online can be dangerous. With all of the fake storefronts and scams, it can be hard to find a reliable source. That's why when BT Miners reached out for a channel sponsorship, I started by verifying that ordering and delivery went smoothly with the purchase of my own. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICMinerValue.com and CryptoMiner.com. Follow the affiliate link in the description and tell them Soat sent you to support the channel. All right. Welcome back, ladies and gentlemen, boys and girls. So, past precedents, cross-asset volatility, and on-chain metrics suggest that Bitcoin is likely to bottom out between November and December of 2022. Now, usually we don't utilize WCCF Tech to cover any cryptocurrency because they've been very poor at reporting on it in the past. But I always love to see, especially when it's contradictory to something like CoinDesk, which we just read earlier, we should see like the best performing months in October, for example. Usually when I see like something like within retail that's kind of opposite of that, I want to see what they're saying, why they're saying it, and get a better idea, right? So the proverbial stars appear to be finally aligning for the world's largest cryptocurrency by market capitalization, as historical precedents, cross-asset volatility, and key on-chain metrics suggest that Bitcoin's bottom is nigh at hand. And so here we go. Bitcoin was able to carve out a bottom 413 days after reaching a zenith back in 2013. In 2017, this process took about 364 days. Based on these two data points, we can conclude that Bitcoin is likely to bottom out between the 9th of November and the 28th of December 2022. Notice that there is a decreasing trend between these two data points, where the bottom in 2017 came 48 days earlier than the one in 2013. If the same held true this time around, Bitcoin should have bottomed out within 317 days of the 10th of November 2021, when the cryptocurrency had formed its latest all-time high. However, this has not occurred. Nonetheless, is a very powerful analog that grows even more potent when viewed in relation to other evolving metrics. We have been consistently hammering home Bitcoin's elevated correlation with the high beta US equities. But as you guys know, when we were looking at this before, which we can pull up again, this appears to not be the actual case, right? So, I think we did like 1 year here, right? Hold on, I'll pull these up for you real quick, because we have done this before. And you'll notice that the correlation isn't exact, right? In the S&P 500, right? S&P 500. Because everybody wants to keep saying that we're correlated, but it's clear that we're not correlated anymore, right? Especially after this last dip on Friday of the traditional markets. Crypto didn't really dive that much. On a 1 year chart, you can see here back in June, we talked about this last week, but back in June, we had our big dip, right? This is fully expected if we look at the traditional halving cycle of Bitcoin, right? And then we're kind of going along pretty much sideways. But if you look at the stock market, it's a little bit more jaggedy over the past year, with obviously this past weekend, you know, having that big dip, and the S&P 500 not any different. These two look the same, right? Dow Jones, S&P 500, those are clearly correlated. You hit the Bitcoin, that's clearly not correlated. So I actually completely disagree with this, with them hammering this home. I think they're incorrect. This regime poses sizable risk to Bitcoin's status as a macroeconomic hedge. I think only certain people will see it as a hedge, and I think it'll be too late for people that don't see correlate it to the halving cycle as opposed to traditional markets. It also suggests that cryptocurrency will not be able to exit its current bear market when equities continue to suffer under the proverbial hammer of the Federal Reserve, a situation that places Bitcoin under the thumb of the apex monetary institution. Now, that is a much larger concern, right? And as we've seen, of course, we're starting to kind of see essentially a situation in which the US, the SEC are trying to get more control over the cryptocurrency market, really kind of focusing down on Ethereum as of right now. I think, so you have two attack vectors, right? So the attack vector on proof of stake, just so everybody's aware, there's two attack vectors from the US government perspective, from the federal perspective, right? From the proof of stake perspective, it's a security. So you put that under the SEC, and then because it's also proof of stake, all of the nodes are transacting all of, the transactions on nodes within the United States, therefore giving the Federal Reserve jurisdiction. That's the argument from the Fed right now. As opposed to that, they can't do that with proof of work. So the main attack on proof of work has been, of course, the environment, right? Environmental impact. It's been very clear that as we look at regulations and so on, they are kind of unjustifiably targeting cryptocurrency mining while ignoring other industries that are much larger offenders, primarily probably because you have, those other offenders being pretty big into the pockets. I'd have to put on a tinfoil hat and get into that in a different video. But these are the two ways, right? Proof of work, the attack is from the environmentalism perspective. Proof of stake, a pretty easy securities perspective with, of course, that added jurisdiction over transactions here recently. However, Bitcoin is currently less volatile than the benchmark Dow Jones Industrial Index based on the 10-day realized volatility metric. Awesome to see them actually acknowledge this, by the way. It also proved to be less volatile than the British pound sterling for a brief period of time last month. Additionally, Bitcoin was one of the best performing assets in Q3 of 2022, having registered a gain of 3.1% during the period. For reference, precious metals were up 1.3% and cash only 0.2% during the quarter. This relative outperformance indicates renewed intrinsic strength and is exactly what Bitcoin's bulls require to exit the current perfidious regime, where the US 10-year yield drives short-term momentum in US equities, which in turn dictate Bitcoin's price direction. The shorter-term supply of Bitcoin is currently at an all-time low, with 22% of the supply having remained stationary for 6 months now. This suggests capitulatory conditions and again strengthens the argument that a cyclical bottom for Bitcoin is nearby. And so we are talking about basically the cyclical bottom being determined by the previous all-time high, or previous bottoms date ranges, right? That is the argument of the article. It's kind of interesting. They almost contradicted them. They didn't almost. They actually directly contradicted themselves in basically going from, okay, based on previous performance of Bitcoin, we're going to see essentially the bottom in sometime in November or December of 2022. However, because they wanted to drive home that it has a correlation between it with U.S. equities, which then they said, oh, wait, no, Bitcoin is actually performing better than the Dow Jones and the S&P 500, as we showed you guys in the charts. So it's pretty clear to me that we're starting to actually see if Bitcoin's going to function as a hedge as initially kind of expected or theorized. And I think it is performing a lot better than people realize. And I think that once we get into the next halving cycle, you're going to see potentially a complete decoupling of Bitcoin from equities markets. It should be really interesting. Obviously, that's not financial advice. It's just super exciting to watch this happen, right? Especially as we kind of start to get into really the very painful spots of the bear market as it sits. Let's talk about the RTX 3090 and mining profitability now as well. So essentially, if we calculate this out with 110 solutions a second on ZIL hash, 55 on Capal, ProgPal, and Fira proof of work, and then 10 cents a kilowatt hour. Let's go ahead and get that calculated out. We have nothing profitable at 10 cents a kilowatt hour, right? You lose the least amount of money on Flux right now. That's kind of par for the course. Rio, you're losing 21 cents a day. Bitcoin Z, you're losing 22 cents a day. Ergo, you're losing 26 cents a day. Vertcoin, you're losing 24 cents a day. Meow Coin's even in the red at 28 cents a day. And then you kind of scroll down and it goes from there, right? If you mine Flux directly, you're losing 33 cents a day. Ravencoin, you're losing 34 cents a day. And Ethereum Classic, you're losing 43 cents a day. And that's pretty much par for the course, right? Caspa losing 46 cents a day. But let's take a look. It doesn't tell the whole story, right? We want to see what hash rates are at. Bitcoin obviously being the big daddy. You can see that big pump up this week. Friday, kind of sitting around here, and then boom, ton of hash rate comes online. We go to 266 exahash a second, looking pretty crazy. You can see right here at the end, the difficulty adjustment shot way up, you know. So you can't even see it all the way. You can see the line barely over here, but it popped up from about another 10-15%. Yeah, about 15%. Oh yeah, we read it earlier. 13.55% exactly, right? We did read about that earlier. Let's take a look at Ethereum Classic and all of the Ethereum networks. Hash rate still not really moving at all. 160 terahash a second, very consistent, most likely all ASICs. Ethereum proof of work, most likely all ASICs as well, but it's been kind of coming down in hash rate over the past 7 days, and it is sitting around 42 terahash a second right now. Ethereum Fair, which is Justin Sun's version of this. Remember, Ethereum proof of work is Chandler Go. Ethereum Fair is Justin Sun. Much lower hash rate, but 6.5 terahash a second. And then if we go from there, we can take a look at Flux. I think we're at 8 mega solutions a second. Yep, still around 8 mega solutions a second. So no real changes there. We can take a look at Ravencoin as well, which is at 16.96 terahash a second. Ergo's really steadied out as well. I've been tracking this more closely, just due to the fact that its hash rate has become a lot more, or its difficulty adjustments become a lot better. It's steadying out, obviously, the hash rate here over the past week. It's been extremely consistent. The network is looking extremely healthy right now, ever since EIP 37. So that's good to see. We are at 56 terahash a second on the pools. Like I said, I think they couldn't have hoped for better results out of the difficulty adjustment than what we've seen. Very, very good and steady hash rate for the most part. And then we have Neoxa. And Neoxa is sitting at 1.81 terahash a second. It's been a little spiky. It did gain some hash rate over the week, but then it quickly lost it, peaking kind of close to 3 terahash a second, but then coming back down to that 1.8 terahash a second range. And then we can go ahead and look at Caspa as well, which is sitting at 114 terahash a second. It has come down over the past 7 days, or over the past week, from a peak of 153 terahash a second to coming down to 114 terahash a second. Now, there is 196 terahash a second on the network, right? Because a lot of people are still mining to their own nodes, because it is the easiest, one of the easiest, if not the easiest, nodes to spin up and solo mine to, plus the most benefit for solo mining as well. And then I believe Radiant was another one that we've been keeping an eye on, another low cap coin, 19.35 terahash a second, with, of course, it coming down over the past 7 days from 30 terahash a second to about 20 terahash a second. And let's take a look at ASIC mining. We have the Antminer L7 in first place, really coming in probably around $14 a day. Merge mining Doge, Litecoin. Got the Antminer Z15 coming up. This might not be exactly accurate, but it does look like it's for Zenhash. Kind of interesting to see it in second place. And the iPolo V1 as well on ETP, which is going to be an ETH hash coin. I haven't heard about ETP in quite some time. I don't know how accurate that is. iPolo V1s, I mean, people have been talking about that one because of the Grin coin, pretty much pushing out GPUs on the Grin coin side of things. Gold Shield KD6 at 561 a day. And then if we scroll down, we got the Antminer S19 Pro at under $1 a day. And this is the important one to pay attention to, right? Why is it important to pay attention to? Because like we were talking about earlier, basically, as far as Bitcoin is concerned, you can see that we had a 13 to 15% increase in difficulty on the network. And the margins are so tight that it's going to be nearly impossible for anybody other than power companies and nation states to compete in the near term future outside of like the benefits that people can get with renewables in like developing countries, right? So if you wanted to do, and I think this is really like where if I wanted to get into it from a perspective of Bitcoin mining, I would go this route, which would be the more humanitarian route, which would be let's go, because there's a few things, right? You're going to have less regulation at like basically building dams or like in developing countries or like trying to build out power or whatever, and then monetizing on the back end for the country or the community or whatever with Bitcoin to help subsidize some of the improvements to their infrastructure. And maybe that is right now where you focus on the Bitcoin mining side, because outside of that, like competing stateside with large farms that are basically, you know, have access to power companies directly or are literally run by power companies means that you just consolidate, and like these margins are just getting simply insane. Like, I don't even know how you do that. That's like 80 cents a day for what, $3,000? That's rough. Okie doke, let's get into questions and answers. Remember, super chats are never required. Always appreciated first to be answered. Tagging at Son of a Tech will highlight the message orange, making it easier for me to read. And I hope all of y'all are having a great day. I'm happy to be back, but I am still feeling a little under the weather, so I'm not going to probably go for a super long time. My nose is starting to get stuffed up. Maybe you guys can hear it a little bit. Oh, I might have to refresh this. I did pop out of the chat and then it started kind of, I can't scroll up as much. Okay. It looks like it's working though, so that's good. And if you guys don't have any questions, we'll just give it we'll wrap it all up. The conference was good. I enjoyed it. Not fun getting sick though. Shara says, as Son of a Tech, welcome back. You installed the Caspa node and solo mined to my node. Found one block versus mining to Woolly Pool on 24 hours. So 329 on there, and then the 457 for the 24 hours on Woolly Pool. I mean, yeah, that's going to happen. There's always going to be a certain amount of luck, right? Well, it's only better to solo mine. Well, it's always better to solo mine in my humble opinion, but that's for network health as well. However, like if you're going to have it like it's going to work out at the end of the day, right? Because you may have a day where you find two and then a day where you find one. You'd have to run a much longer test than 24 hours, essentially. Elm Aussie says, ask Samatek, would you rather have an S19 XP or the equivalent value in Bitcoin? That's an interesting question. You know, at this time, you do make more, but like, so if you're going to give it to me or give me $3,000 in Bitcoin, I'd probably take the miner, I guess. Yeah, I'd take the miner because I hodl silicon, but at the same time, like, I don't know, I get a little nervous around the Bitcoin miners because there are so many more new ones coming out, and I feel like it's going to be extremely difficult to remain competitive. Where Red Dragon says, ask Samatek, in your opinion, do you think the ERG dev team keeping the followers is an example of a lack of morality? I did say, here's the thing. My argument was that it's deceptive. Deception is immoral. And so when the devs were asking me what's immoral, and I said the deception, it got very frustrating that they said, what's immoral again? And I kept saying the deception. That's like literally my only argument, right? Like, it's very clear cut. You're deceiving potential investors and participants within the ecosystem. Deception is immoral, therefore the action is immoral, yes. I don't know how it gets any more or less straightforward than that. I don't need to get into the drama between Charles. That's irrelevant, right? I don't need to get into a philosophical debate of, well, other people have done it, so it's okay for us to do it. That's like, I'm not going to be able to go into court and be like, well, you know, a whole bunch of people have murdered people before, so it's okay that I murdered people. Like, that's just silly. Like, those arguments don't make any sense. They're logically inconsistent. So I stated my opinion. If you have a reason why you think it's not deceptive, then I guess we can have an argument from there, right? You could tell me why having 600,000 followers that you did not earn representing a financial product, a potential financial product, right, is not deceptive, then we could have an argument. Does it mean I'm not going to report on Ergo? No. Snark says, as Samatek, building out electrical infrastructure in developing countries for mining could be a great thing in the long run for those countries. If mining gets more profitable, they win. And I think, Snarks, that is the direction that I would want to go with it. I don't really know. I talked to some people, this week that are doing that sort of thing. And I think that from a humanitarian perspective, that's super awesome and probably the direction that I'd want to go as it pertains to Bitcoin mining in particular. So like earlier when the question was, would you rather take the Bitcoin or the money or the Bitcoin miner? I'd probably rather take the miner, and then, obviously I'd rather have like 50-50, but because you also need the money to build out the infrastructure, but I'd rather take the miner and give that to somebody in a small country. 84 cents a day to a small developing community in Africa or Latin America, etc., is going to be way more impactful than 84 cents a day for me, right? So there's that argument as well for it. Paul says, as Samatek, agree, it can be deceptive to new investors. Yeah, that's the only argument. Dazin says, ask Sematech, why did Charles do it again? Well, initially, Charles, I don't know. I don't really know why he did it. I mean, he had a post, I think like the justifications none of the justifications really made sense. I mean, there was a justification that a majority of them are bots. Okay, cool. So not only are you being deceptive on the front of how many followers you have, but they're even acknowledged as bots for the most part. So, look, most of the arguments in favor of doing this are illogical, but it's kind of pointless to worry about it. It's just, do you have a rebuttal to it being deceptive? If you do not, then I don't think I want to have the conversation anymore, because I'm kind of tired of it. And I have found, frankly, that a majority of the Ergo community have not. I just lost a lot of respect for a lot of it. There is no reason to say a lot of things you all said, right? Attack in the manner that you attacked, and I'm done giving here's my position. You can argue that position. Any of the attacks from here on out will be completely ignored. You will be muted, and I will never communicate with you all again. That's it. That includes all the devs too. That includes ErgoPad devs. Like, if you guys are going to come out and attack, look, unless you want to have a philosophical debate on, is deception immoral and was this act deception, there's no other reason to come out and everything else has just been pointless. Okay? That's it. Locke says, ask Sematech your honest opinion about Caspa. I really like Caspa from a transaction per second perspective, and I like Ghost Tag Protocol. It's going to take a while. I think once we see it move over to Rust, we'll have a better idea. Shia says, at Sematech, can one decide what to mine based on network hash rate difficulty price only? Compare ERG versus CAS on mining pool stats. One decide what to mine based on network hash rate. Well, I mean, that's what to mine calculates out anyways, is all of those factors. Trestle says, that's Sematech picking up the A770s on Wednesday. I'm going to try to, yeah. Weary says, at Sematech, I worry that keeping the ETH C followers shows a willingness to be deceptive to get ahead, and they're willing to do worse things as well. I cannot determine future actions with past actions. I must remain unbiased in my reporting. But basically I can tell you this, Dragon, if something like that happens, we'll report on it and make sure everybody's aware, right? And vice versa, if positive things happen, then we'll report on the positive things. Raymond says, at Sematech, do you hodl your 1660 Super? I have all my cards. I haven't sold any except for 130.90. Raymond says, when will mining be profitable again? I mean, it's profitable depending on, your power rate, but in general, when will we see the market start to recover from a mining perspective again? 6 months to a year. I'd say March 2023 at the earliest. But I do agree with greater market sentiment with some people that I've discussed where it could be closer to September. All right. I think that's going to wrap it up for me. Getting close. Real Ergo says, that's something like, how do you recommend storing private keys and recovery phrases on for multiple wallets? I mean, if you have like a lot of like small, like, you know, things that aren't compatible with a hardware wallet or whatever, you can put them on, you know, a USB drive and BitLocker it. That's the easiest. If they're paper wallets, you can use like one of these, SecuX Xseed Plus. These are like little metal metal shits that you can put keywords on. I don't know. Doesn't really matter. You can use something like that. Write it down, put it in a safe. If you want to be digital, utilize a... I'm done, guys. I can't do it. I'm too sick. Thanks for watching. Hit the like, comment, subscribe, and notification bell down below. I'll see you next Tuesday.